Okay. How are we all doing? So, interesting day today, obviously with NFP. I mean, it's kind of thrown a bit of a curveball in a few places. I don't think it will change too much of the narrative though, but I'll discuss it in due course. But how is everyone? It's been, I think, about 2 weeks since we last did a stream together. But yeah, let's get straight into sort of what we want to be talking about. Again, whenever you're looking at markets, I've just got a little hair there. Whenever you think about markets, right, you have to think about what is right now the driver, right? And, you know, 2 weeks, 3 weeks, 4 weeks ago, we was all talking about Trump, right? That was really prevalent. How do you know if it's prevalent? Well, basically, if everyone constantly talks about it, that's kind of how you know it's prevalent. So, like you've seen it on Bloomberg or Reuters or any other news outlets you want to use, it was all about Trump, right? So people kind of forgot about the data. They basically forgot about what Powell was doing, speakers, etc. Then afterwards, it started to die down, all right? The news started to die down a bit, which is fair enough that that happens because markets need something new to trade. If we haven't got something new to trade, then nothing is going to happen, right? They get bored, shall we say, of that news. Then what markets thought was, okay, Trump is now starting to get boring. What is going to be prevalent for us to think about? Well, then we know it's going to now go back to the data. It's now going to go back to what Powell and his team is doing, what the new, governor member that will be coming in, I think in around May time, Governor Walsh, what is his policies? What is he expecting? And that's been fluctuating that dollar, as you may have seen. So as usual, let's just run straight through in terms of the calendar. Let me just quickly... yeah, that should be fine. So let's just have a little look at what we got. So let me just make this back out of dark mode. There we go. So let's have a little look then on the calendar. So let me just quickly filter and we'll have a little look. So we did have Japanese elections over the weekend on Sunday. Now there's for the yen, right? Because obviously for those who are new here, I am mostly fundamental driven. To be fair, it is the driver of the market at the end of the day. So hopefully people are starting to sort of get into the gist of it, or at least pique the interest is what I want you to do. But we had the elections over the weekend for Japan. Now it's the lower house elections, and Takaichi, she didn't have that yet. They then done an elections and she won it pretty well, actually. So now that she basically has the full sort of support from the government, the issue for the market now is what are her policy is going to mean for the BOJ, right? What do they need? Like, what does she want to do with interest rates? That's going to be the interest for the JPY. In addition, markets at the moment only care about stability on the JGB market. So if I show you JGBs, which is the Japanese bond market, by the way, JP 10-year, we want stability, right? And this is nice stability right now. All of this can cause a bit of struggle sometimes. It depends on sort of the reasons as to why. This is when we initially saw I think it was like the JGBs were going absolutely nuts. And we saw a huge rise and we saw a downside move in the yen. So now that we're having some sort of stability, what we're now thinking is, okay, cool. How stable can this be going forward? And the only way to know that is by understanding what does Takaichi say going forward? What does the BOJ say going forward? And this will help allow the yen to either weaken or strengthen further. I think it could probably strengthen a little bit further as long as there's stability, which so far, if we look at dollar yen, we're seeing a bit of strength, some yen strength on that stability front. So I'm not going to trade it too low, to be fair. I'd only trade it sort of down towards this high low here, that high low there, possibly down there, but at least down to here is where we'll see fit. Hopefully we'll have some more news after that. And then we can sort of discuss maybe the ZN strengthen a bit further. You know, the trades that we were talking about last week, or 2 weeks ago actually, on our last session, did actually move quite a decent amount. GN downside is what we spoke about. AUD yen upside, although we have kind of sort of tilted back slightly. So our stream is around here, and you can see that we continue to trade a few hundred pips, 400-500 pips after that. GN as well has moved quite nicely to the downside. Our stream was around here, wasn't it? Wednesday the 28th, and it continued to strengthen. What's that, 200 pips or so? So a lot of the trades we've talking about has continued. Now in fundamentals, right, you don't always change your bias. Basically, I'll write it up in the textbooks for you, or a text box. In fundamentals, you don't change your bias each week. So what do I mean by that? Basically, what it means is you don't one day go into the week and say, okay, I'm going to buy the dollar because we're going to see a pullback, or I'm going to sell the euro but just for the sake of it, for the bounce, right? You don't do that. What you want to do is follow the reasons why it should continue in that direction. For example, right, we've been bullish the AUD for a good amount of time. You know, since our sessions together, we've remained bullish the AUD, and it's continued to strengthen, right? Strengthen and strengthen, 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 strengthen. Cool. So it's moved a decent amount, like a good, across the AUD pairs that we were looking at, probably at least 1,000 pips at this point. So what you now have to ask yourself is, why can it continue? Are there anything that goes against that bias? Essentially, that's what you ask yourself is, why would I sell the AUD? Why would I sell the euro? These are the questions you ask. And if there are no solid reasons, the markets are not going to care about it. They're going to pull back, and then they're going to continue to go long. They're going to pull back into an area of demand or in a previous major high, like, I don't know, 118 on euro dollar, and then it will pump. AUD 167 or 164, these big whole numbers, as long if it lines up with demand as well, that's even better, because now you have two confluences there, and then it will continue, right? So these are the questions you ask yourself each week: is the reason I am long, can it continue or not? If it's a yes and there's no reasons it can go lower, then you know that you are still going to go long. You don't sell into your buyers. That is basically silly, in my opinion. Anyway, I've noticed most people lose the most when they go against what the actual trend is. So at the end of the day in trading, you want to try and remove the amount of volatility out there as you can, right? Remove the amount of rubbish trades that you take. How do you do that? Go where the trend is. It's simple and it's basic, but it works at the end of the day. So these are the questions we ask each week. So in Japan, I do feel like probably the yen can strengthen a bit further. Monday was pretty dead. Nothing really here was said. Tuesday, yesterday, core retail sales and retail sales, not really a market driver, to be honest with you. Basically, the markets aren't looking at that for the Fed, right? Retail sales can't really tell us what the Fed is going to do. Whereas like NFP, CPI, unemployment rate, average hourly earnings, which is like wages, these can give us a bit of a guidance on what the Fed can do or what they should do. And then we trade on that assumption. And that's what you're doing. Today, obviously, we had NFP. Now, on paper, it looks decent, right? On paper, on the headlines, it looks good. So if we scroll down, you can see average hourly earnings, wages basically was stronger. Non-farm payrolls at 130K. A lot of people were expecting a lot worse NFP, to be fair to you, because the previous week, so last week, we had like downside surprises and jolts. ADP was lower. Growth in the services PMIs was ever so slightly lower than the last print. And we saw, what was the other one? Jolts. And jobless claims did increase a decent amount, still within normal levels though, but it did increase. So a lot of people were kind of expecting a lower NFP. Same for myself, I was expecting that. And the reaction of the dollar, if I show you quickly on the DXY, the reaction of the dollar was initially stronger, but you have to ask is, does it really change the narrative? Probably not. And these are the questions we ask, right? This stronger NFP that we saw, on paper, it looks good on the calendar, but under the hood, not so much. And we'll have a little look at that as to the reason. That's why you see sometimes those big wicks and then it basically goes back down lower again, because what happens is algos like quants buy up the currency in on the initial reaction, because a lot of these quants, they have reactionary to data or reactionary to speeches, etc., using AI generated models, of course. That's why RAM prices are so much, but under the hood it's not so great, so they exit quite quickly, and then obviously that's when the other traders step in. So that's generally what I have seen from DXY, or just the dollar in general. So sorry, let me answer some. If you have any questions, you're more than welcome to ask. But what type of trading do you do as you trade fundamentals? What is good? I'm more of a swing trader. Day trading is too volatile, so it's a lot more difficult to be profitable. And at the end of the day, it's more so kind of personal to yourself, right? That one strategy might be working for somebody else because their mindset is different. They might have less stress going on in their lives, so they feel less inclined to constantly buy or get in a trade. So you have to figure out what type of trader are you. So are you somebody that likes to be a little bit more laid back? Are you somebody that likes to want to be more erratic on the markets? Again, there's no right or wrong answer because it's more personal, but these are the questions you have to ask yourself. And for me, I'm slightly more laid back, so swing is basically pretty much perfect for me. What days do you stream? Wednesday. What makes you bullish on a currency fundamentally? Basically, the best way that I've figured out, right? I've been doing fundamentals for 6 years now. I've been trading for 7.5. So I wasn't doing fundamentals prior to that. But you kind of have to be true to yourself, and you do eventually understand that something else is driving markets, and that's kind of where I found fundamentals. But the way I have figured out after these many years now is understanding the theme. So ask yourself, what is driving markets? Right now it's data and Fed. Then ask yourself, what data is applicable to this. Let me just move that over. Applicable to this. So for example, question mark, like NFP, growth data, employment data. NFP obviously fits in that. Inflationary data. You can use forward-looking indicators such as PMI data. So basically, you just monitor the data each week, asking yourself, does it make sense for us to still go long or still go short based on what the theme is? So that's what we ask. Then if it tells you to go long or short, let's say go short in this example. Cool. What do we then do? Only supply zones. Then higher time frame. Supply zone, and then refine. This is just how I do it, to 4 hour, then a 1 hour break of structure out of the supply zone, then wait for a pullback into another supply zone or major level. So like those 115s on euro dollar, those 130s on GU, these are major levels. Then you sell, of course, stops above the higher time frame high. And then each week, ask yourself, does this trade still make sense? That's it on an absolute as simple as I can put it. That's kind of how I do it. You'll find out, you'll figure out what works for you. You can add on like the bond market, you can add on like rate differentials, you can add on other sort of little nuggets there. But that on an absolute basic level is kind of how you do your fundamentals really. So if that tells me to go short, I'm only going to look for supply zones. If that's the sort of thing, the rough gist you do, then obviously you monitor like any events that's happening globally, etc., etc., etc. As they said, the Fed are more data-driven. That is correct. For this stream, can we do an active giveaway? Yeah, I'm not sure how that will be done, but if you can let me know, I'll have a little look into it. I'm new. What's bias? What do you mean by that? Fundamentals not for day trading. Correct. You can apply it to some degree in terms of like, for example, I am bullish fundamentally, but I want to try and day trade. So I know that the direction is probably going to go higher based on X, Y, and Z. So statistics, everyone bangs on about statistics, but again, it is, data doesn't lie at the end of the day, or shouldn't lie. And then you can kind of like try and trade around that direction. I don't know how, because I don't do that, but I'm sure there's ways of doing it for sure. US 30, I don't trade it. What markets do you trade? Mainly FX, commodities, and I have started to do equities recently. Not trade it, but more so look into it, because equities drives like risk on currency, such as like AUD and the NZD, although they are more being driven by China right now. But those are the ones I mostly do. People tell me to do futures. I might start it if I can be bothered. But yeah, those are my main markets that I'm looking at. Can you please break down? I love your entry model. Thank you. Look, I've done every single sort of model you can think of. I've done ICT. I've done Wyckoff. I've done every single model that you can think of. At the end of the day, it's what works for you as a trader, right? There is no right or wrong answer with what strategy works, right? People trying to say, oh, this strategy doesn't work. That's just a load of rubbish, basically. I've been there. I've done it. For me, I understand that most strategies do work. It's just about what type of market are you trading it in, and does it make sense to you as a personal trader? And to me, this is the strategy that works for me in terms of how I like to look at stuff. Can you please do a breakdown on how to do top-down analysis? Fundamentals will be quite difficult in terms of doing top-down, because we would need like at least 20 hours to get into it. 15 to 20 hours in terms of like starting from the absolute basics, understanding the basics like to an actual good amount, because that, at the end of the day, it's all of the data that you see on the charts, right? On like Forex Factory, Trading Economics, whatever calendar you want to use. It all boils down back to the basics. So if you understand the basics, you understand what the data is actually saying. But we have to really dive into each one. So it's a bit difficult to do for fundamentals. Technicals, sure, that's fine. I can do it 10 minutes or so. But fundamentals will be quite difficult. Do you have YouTube or Twitter? Twitter, I don't. YouTube, I do. It'll be on my Insta. Link somewhere. What's the best platforms for prior market analysis and news? So I use Bloomberg a lot. So Bloomberg is sort of, I've used this for forever now, since COVID. Bloomberg is the one I use for like general data. So like I'll look at like, or not general data, like news and stuff. You can use the ING, which is another good website. You can use Reuters, which is free. I should have it on here. We all like free stuff. Reuters is good. You can use, think of other ones out there. Those are kind of the main ones. And then there's other little bits and bobs out there. In terms of data, you can use either Forex Factory just to get the general data. Then you can dive into the underlying data, which you should generally be doing. So like, for example, if you go on the BLS website and then diving into slightly this, it seems boring, but what you have to understand is not all of this is tradable, in terms of a lot of this is economics based. Yeah, we are branched off economics in terms of trading, but like a lot of it is not going to be applicable to trading. So what you'll soon realize is that you can kind of very skip basically 95% of this, and you only focus on the main points. Another website you can use for free data is Trading Economics. Another good free website to use. So you've got all the countries here, United Kingdom, whatever, prices, and then you can go into like the general inflation. You don't have to read through all of this data, by the way. It's only what's applicable to trading. That's it. That's what I generally would use. Do you know Trader Nick? I do. I have used his Edge Finder, yes. I like that most strategy, yes. It's whatever's suitable for you, to be honest with you. How do you handle unexpected news shocks? Okay, so there's two type of events, right? I'm sure you might have heard of these terms before. There's known as black swan events and grey swan events. Grey swan events are stuff that are that can possibly happen. So you can slightly prep for it not 100%, of course. So like, for example, a grey swan event might be like Keir Starmer leaving the Labour Party, right? Stepping down. That's a grey swan event. You can generally think, okay, if this happens, the pound might react here, the FTSE might react here, the BOE might react as such. Therefore, this now means X, Y, and Z. So you can kind of mentally prep for that. Black swan events are stuff that just comes out of nowhere, such as COVID, such as the financial crisis, such as the Greek bond crisis back in like 2013, something like that. So these are big events that you can't really predict. Those events, it's a bit unfortunate, right? You might take a bit of losses, you might go in a lot of trade, in a lot of wins. That's just the nature of the market. Other events out there, such as news events, you can prep for them. You don't trade news though. That's the important, like for example, NFP, right? I was not trading NFP, i.e. I wasn't in a trade prior to NFP in anticipation, because what we want to be doing is waiting for the data to come out, then interpreting what that means for what? The theme. It all comes back to what the theme is. So what we saw today from NFP doesn't really change much for the theme. So I'm remaining bearish the dollar, right? So that's what we're thinking. So those are the three sort of events that you'll be looking at. Okay, yeah, I can go through some charts. That's no stress. Bloomberg's really good. They leave us. I guess that's true. Sometimes they are quite political, but generally they are kind of neutral. Mark, do you look at fundamentals to take profit? Yes, that's one of the models that I would use. Yes, for sure. Because if you're going long a currency for X, Y, and Z, and then something changes, you don't want to hold on to trash, basically. So yes, you can use that as well. You can use highs, major highs, whatever. What's your thoughts on BTC and crypto? I don't do that. I used to back in COVID. If we trade in high time frames like for hours, 4 hours, I wouldn't even class as high time frame. I'd say that's more the lower end of the higher time frame. And take entry whenever. Yeah, I guess. Look, every single trading strategy will work in certain market environments, right? Don't listen to these people that will say this is the only strategy that works. If you don't do this, you are unprofitable. Like, that's just a load of rubbish. So what you have to do is get the statistics on your data or on your strategy, i.e. use tools like TradeZilla, use other tools if you want to, like Excel spreadsheets, whatever, back test and forward test year, 2-3 years worth of data. Because if it works in that sense, right, and you understand, okay, it only works in this market environment, it doesn't work in this market environment, then you know that it still works, but if it changes into another market environment, you have to slightly switch the way you trade. So don't listen to anybody that says it doesn't, like, no, every strategy doesn't work. Some are only applicable to only certain market environments. So you have to do the data on that for sure. Trading, I don't do crossovers, but I know HSBC does. So take that as you will. Trading is about economics, not technicals. Yes, you need a good technical entry model. Correct. With recent labor market data, could we expect less cuts? Markets did price back some slight cuts, so they push it back to July. So if you look at the, where is it, CME website, the Fed Watch tool is always good to look at. They did push back slightly towards July, I believe, unless that's changed. So June. So June, okay, so they have kind of pulled it back slightly, I guess. But last time I looked on Bloomberg, they said July, so they might have just dialed that back. Let me look at the bond market. So 2-year yields is what you kind of want to be looking at. So obviously the initial spike, so markets pushed back rate cuts in that instance from a bond market perspective. So we saw bear steepening in the bond market, and then now we should be flattening out. Bull. Yes, that is, yeah, bull. That's flattening of the bond curve as of this pullback here. And this pullback here. So it seems as if they're kind of trading it back slightly. Sorry, let me go back up. Right now, it is, sorry, it's still in June. But when you're trading the dollar, right, or you're like bearish the dollar, what you have to ask yourself is, what is the dollar comprised of? Why would the dollar strengthen? The only way is we can strengthen, like you said, it could be delayed back to October. That's the only angle that I could see the dollar strengthening. So what you have to now ask yourself is Is the data really pointing to October or not? I probably would say not. It's either June or July. It's just going to flip-flop between them two. So all we do then is each week, if there's US data that can apply to rate cuts, ask yourself, does this change or does this push back those rate cuts? If it's a no, the dollar will continue to sell off. Because if we look at CFTC data, so or COT data as it's referred to as, so COT data, US dollar, right now, net positioning is very neutral, right? So what that means is there's still an angle for the dollar to weaken off, even though price action wise it's sold off quite a lot. Like if you zoom out, you can see that's quite a big sell-off, which is technically true, but in the eyes of positioning, it's not that sold off. So there's still room for it to sell off further or strengthen. It obviously depends on the data, but I'm more so bearish. So I see more room for it to sell off. But yeah, that's the only way the dollar can strengthen is if rate cuts get pushed back. And right now, I can't see that happening, in my opinion, of course. Whenever you trade, whenever in high time frame, the 4 order block followed by possibly, I don't know what that is, sorry. How do you identify supply zones? Basically, where we've gone from it, like just go back to the basics, where we've gone from a period of bullish price action to the supply coming through or selling pressure coming through. So for example here, where we came from a bullish price action to then selling pressure. So like if you were trading at a DXY, for example, you know that probably around here would be an area of supply. So if we pull back into there, such as like here, then you would wait for a break of structure. So break below the higher low, creates a lower low, and then you're aiming for another pullback into either a higher time frame level, like 97.5 if you were trading the DXY. Obviously you can't trade the DXY, but let's say for argument's sake you could. Area of supply there, lines up with 97,500, selling there, stops above the high there, and then you'll target either the first low here, or if you zoom out a bit, you'll target these lows at 95 hold, and then 94 hold, and then towards 92 to 92,500. So that's kind of what I would want to be doing. Yes. So that's it on a really basic. How much risk do you do per trade? Someone asked me this before. So the way I do it is I actually kind of learned from Nomura. And what they do is they have like a band of risk. So their risk is, let's say, for example, my one is between 0.5% and 1.5%. So my risk will fluctuate between them two based on how confident I am in that position. So for example, let's say I'm 4 out of 5 in terms of confidence, I'll probably risk like 1% to 1.25%. If I'm like 5 out of 5 in terms of confidence, because a lot of things are lining up together, then I might risk slightly more, because what you want to be doing is taking advantage of your confidence. So obviously everyone's different, because some people might only risk 1% per trade, only 2% per trade, only 0.5% per trade. But for me, you want to be capitalizing on when there is just positions out there that just makes a lot of sense. That's kind of how I do it. Do you prioritize long-term economic cycles? 1 to 3 months, because I don't do like those 6 to 12 month. I have held trades for that long, 6 to 12 months, sometimes longer, but it's not like I'm holding it in anticipation that a year it's going to be here. I'm holding it, and then each month I'm asking myself, or each week even, does it still make sense to hold? Does it still make sense to hold? And then eventually it leads up to like 6 to 12 months. So for me, I aim for between 1 and 3 month horizon. And then if it still makes sense, I can always extend that target. After that, if you kind of like, for example, if you want to be like, I'm selling the dollar and I'm expecting euro dollar to be at 125 by December this year, cool. But a lot of things can change in that time, and you might hold on to a sloppy position. So that's why I aim for only 1 to 3 months. Do you trade the NAS? I do not. I don't trade the 1 minute time frame. Why are the dollar and gold inversely proportional? Good question. So obviously in markets, right, a lot of it is priced in USD. So like, for example, if your oil prices are in USD, gold is in USD. Gas prices are in USD. Corn and wheat prices are in USD. So that in on itself means if you're looking at XAU USD, that means you're trading gold versus the USD. So what happens is let's say the dollar comes in lower, that instantly skews this price higher, right? Because that means the dollar's selling and this is holding, and therefore that strengthens as a byproduct. You can even look at it like XAU GBP. It's the same concept. In addition, what happens is, or the way gold works is on supply and demand, right? Like physical supply and demand and mental supply and demand, I guess. The way it works is, historically, obviously, how gold has been seen in terms of global history. Like it's seen as a form of transaction. It's seen as valuable because there's only a finite amount of gold out there. So what happens is, and another way to look at it is the bond market. So when you look at the bond market for gold, and if there's massive demand for gold in certain times, for example, in India, whenever there's like festivals in India, you do kind of sometimes see prices of gold in that region do quite well. And India is one of, I think, the largest consumers of gold. And what happens is you do tend to see from a physical demand perspective. But in the market's perspective, what happens is the bond market drives gold. Why? Because bonds are yielding assets. So this is a bit of history now. Gold has no yield. Yield is basically like interest. So, did I spell that wrong? Please tell me. I don't think it did. Anyway, gold has no yield. So what happens is if yields climb, why do they climb? Probably rate cuts, as long as there's no political pressure. Rate hikes. What happens is investors buy bonds, buy into the bond market because of yield. And then eventually what they can do is sell it on the secondary market to like another institution out there and obviously profit on the actual price of the bond. If not, they hold to maturity, they get back what they invested initially. But let's ignore the secondary market for now. So they buy bonds because of yield, because of interest rate hikes, right? Interest rises, so a lot of the assets out there rise as well. Like for example, dollar, a lot of the time, like the ES comes lower because of what interest rates mean in general. But what happens is that rises, gold goes lower. Why? Because there's no yield. Yield or interest. They don't get paid to hold it, essentially. However, in times of rate cuts, like where we're at now for the Fed, yields come lower. Why? Because what happens is and a bond is basically like an IOU. So what happens is like investors buy bonds from the government and they get an IOU. So an IOU is something like in 2 years, you'll be earning 4% because each year you earn 2% on that 2-year bond. So you earn 4% over year. That can be quite enticing for investors. However, if cuts are coming in lower, yields go lower with it. And gold rises initially because they're getting less yield on that bond. So that's the historical instance of why gold goes lower and the dollar goes higher. And that's very complicated stuff. And that's why whenever you see like NFP come in or another CPI come in, gold initially reacts because what it means for rate cuts or hikes. That's why gold reacts the way it does. But yeah, that's a little bit of a history lesson. So apologies if you are confused, but that's how it works. I'm just going through some of the things. From a statistical standpoint, is it better to trade the volatility at the exact moment of the news? No, wait. Always wait. For dollar strength, currently is also a weekly trend from 2011. Yes, that is true. It probably will go a lot lower. I think Eurodollar, a few people out there are expecting like Eurodollar to go to 122, 123. I think the only big level for euro dollar right now is 125, because that's when the ECB will probably become quite stressed about the currency strength, because currency strength can impact the economy negatively as well because of competitive trade of balance of trade. So what happens is companies elsewhere outside of Europe will be getting less bang for their buck because their currency has weakened a lot more against Europe. So therefore, there's less trade coming in, and that can impact economic growth. So I think around 125 is what people are saying before ECB gets quite angsty about it. Sorry, where was I? In Apex, can you trade metals? I am not too sure. For dollar strength is all yes. It's in futures prop firm. Cool. What if we don't get a clear candle like that? Do you consider it? What do you mean by that? I'm assuming you mean the DXY candle. So I always tell people, at least from my understanding, because I've done pretty much everything at this point, my understanding, right, is we always wait for a couple of hours after any event. So stuff like this doesn't really entice me much, because that's just 1 hour's worth of price action. What you want to do is wait for a couple of hours after to see, does the markets actually continue to trade the dollar higher, or do they reverse, like in this example? This reversal would tell me that markets have looked through the NFP print, like what we spoke about before at the start, because the underlying prints are not good. It was only driven by manufacturing, healthcare. I can't remember the other one. And then the other one, a lot of the other ones were a lot worse than it was. So it's kind of cancelling it out, if that makes sense. Are you in any trades? Higher time frame, yes. On the prop firm, I'm on. We spoke about that 2 weeks ago about the trades that are entered, which was GN short and AUD JPY long. That passed phase 1 for me, and now I'm on phase 2. And right now I'm not in any trades because I just haven't looked at it too much. Why did Trump choose his own Fed chair or Powell? So obviously the issue with that, right, with Trump stepping in, is what it does is it creates political interference. And because the Fed or a central bank should be independent of politics, or independent of the prime minister, or independent of the president, whatever, they should be doing what they believe is best. However, Trump has been, talking and putting some stress on the Fed's independence. That in on itself is not good for an economy and not good for the overall outlook, I guess. And as a result, that does create stress. So what markets I've looked at now is Walsh has been brought in by Trump. He was previously hawkish. What we're now wanting to see is, has he changed his view? Because if he's changed his view because of Trump, then more rate cuts will come, and probably a lot quicker. So the dollar stays weaker. And that's why initially what we saw on the news of Walsh is dollar went stronger because of his previous comments. And obviously they got bored of it quite quickly to trade it because he's not really expected to talk anytime soon. And then as a result, the dollar came back to being weaker. So it's about what he is saying next. And yes, that's kind of how I would say it. So he does choose technically, but they should be independent. So if he continues to put pressure on Powell or whatever, that can harm the USD. Sorry, where was I? As we know, gold increasing, does it mean the USD will fall continuously? Technically, yes. But it's about the context as to why is gold going higher. Is it going higher because of stress in the market? Is it going higher because of, I don't know, US Fed? What is the reason why it's going higher? Because the example we gave to earlier is either being driven by supply and demand, geopolitical issues like wars or whatever, or the Fed. So which is the reason why is it going higher? Because in some instances, you get gold going higher and the dollar going higher, right? But that's only because of the context of that reasoning. So like, for example, if the global economy, as a hypothetical, right? The global economy goes into a recession, but the US doesn't. Well, gold will probably go higher because of that recession, but the dollar will see strength from the dollar smile theory. The dollar smile theory is two ends of the tail, it looks like a smiley face, actually. It's like this. Down here is where we're at right now, or like more down here for the USD, where this is global growth is good, GG is good, and mainly that, to be fair to you, and probably US data slowing, coming in lower. This half, it could be either half, doesn't really matter. This half is risk sentiment. So that's the example I gave you of global growth. And then this half is US exceptionalism. So you can Google dollar smile theory. And right now we were in this in 2022, 2023. We're now down here where global growth is getting better. For example, Europe, Australia, New Zealand, Canada's starting to bottom out a bit. And in that environment, the dollar stays weak. And that's where we're at. Thank you. There is a lot. We're doing a little bit of a different sort of breakdown today. It's more educational, but I don't mind it. What are your thoughts on AUD? We've remained long actually for quite a while now, and we're doing exactly the same thing of what we're doing here. We just ask ourselves, why is AUD strengthening? Well, initially, the reason why it strengthens is because of China. It's because of the central bank was quite hawkish and the data is really, really good. In that environment, there is no reason to sell the AUD. And what you do then is each week you just ask yourself, does it still make sense? Does it still make sense? Pullbacks, by the way, happens for reasons as well. So for example, like you said, is it going to pull back deeper? Probably not, right? Shallow pullback, shallow pullback, shallow pullbacks, right? So that's to me probably what's going to happen because there's no reason for a big pullback. The big pullback will only happen if, for example, the reason why it's so strong in the first place, such as China's showing issues, the RBA is suddenly very dovish, or the USD suddenly strengthens. Are those quite likely? Or Australian data does terribly. Is that quite likely right now? Out of those four, probably not. So the AUD remains quite strong, very shallow pullbacks. That's why pullbacks happen, by the way. The only issue with AUD right now is positioning is quite stretched, but positioning can stay stretched for as long as necessary, i.e. until markets deem it too stretched relative to the fundamentals. Then we start to see big sell-offs, but we're not there yet. You can trade the news. Again, it's up to you. I don't trade the news. I don't know anybody that is profitable that trades news. But if it works for you, then sure. But yeah, I don't know anybody that is profitable, to be honest. Well, Trump has previously said he wants the dollar to go cheaper. Correct. Yes. So that in itself inclines like a more cutting idea, doesn't it? All this, make sure we still don't know if it will still be good and when. All this thing and they are doing in the States, maybe for that. Yeah, possibly we'll see. Could be deeper dip in gold up. Good pullbacks for AD, even if we don't get bearish data from Australia. It doesn't really drive, like, gold's not really comparable to Australia in terms of, like, if you see something happen, then in Australia, that doesn't mean gold's going to move. Gold only moves, like I said, on supply and demand, like physical supply and demand of gold, political stress, geopolitical stress, wars, whatever, and what happens with rate cuts or rate hikes. And that's the only three that does generally drive gold. Correct. Yes. Foreign. Yes, that is true about China. Thoughts on the bullion banks? They trade fundamentals or quants? Good question. I'm not too sure actually. I've not really looked into it too much. It might be a question for Google, but I don't really look at those bullion banks, shall we say. I'll look at other institutions out there that are in FX, but such as like Nomura, Rabobank, Deutsche Bank, HSBC, Goldman, JPM, what other ones out there? Credit Agricole, which is a French bank, I believe. UBS are in it quite a lot. I'm trying to think of other ones. Those are the main ones really that I know. But yeah, it might be a question for Google. I'm not too sure about bullion banks, to be honest with you. Now, in terms of the giveaway, now obviously we have two available today, which is Apex and Alpha Capital. So the way to join, as you all know, is type this in the chat. We'll open up for a couple of minutes, somebody asked me this before, why we do that. Because people join in alt accounts, and obviously it's a bit unfair at that point. So type this ! join, and it will enter you into the giveaway. We're not going to open up for like 50 minutes because then you can have like 100 alt accounts and that would just be unfair. So we'll open up for about 2 minutes. So let me add on a 2-minute timer. 2-minute timer. And we'll start that. And then we'll just go from there. So yeah, in terms of charts now, I'm still looking for longs and AUD, especially AD CAD, by the way. They've moved quite a decent amount because what you're doing, that's just missed my entry, which is a bit unfortunate, but it is what it is. Let me see. Oh, and we also got a 6-month Trade Zeller as well. Sorry, I forgot about that one. So we got Apex, Alpha Capital, and a 6-month Trade Zeller subscription. So yeah, AUD right now has still potential to go higher, even though it's still stretched in terms of technicals. Remember, you have to ask yourself is why would AUD go lower? If there's no reason for it to go lower, it's not going to go lower, by the way, right? We don't sell into our buys, remember? So AUD CAD is a good one. So what I would do is start on the high time frame, daily, for example, and you can clearly see here that we have a daily area of demand right here. In addition to that, we line up with previous highs, which is another good confluence. Is there anything else here? Whole number. And 96 whole is another good whole number there. So 96 whole, if I delete the other ones out here like this. We have 43 seconds on the timer, by the way. But 96 whole, so that's 3 good confluences all in one. So what I'll do then is, okay, cool. We pull back into that daily area of demand. Still makes sense to go long. Is there any 4-hour demand zone? There is. So let me extend this box to 4 hours of demand. Cool. So that's the only maximum I'll go down to. And then what I'll do is, let's say we pull down into that region, I'll drop down to the 1 hour. So what we do is we use the high time frame to find areas of demand and then drop down to the 1 hour to find break of structures. So for example, we push into here, then we break structure. So this lower high gets broken. We then create a higher high. Then it pulls back into either previous highs or an area of demand. Let's say there's a demand there. Because we want to go long, remember, then my stops will be below the low here. I don't try and aim for like all these little minor stops here. The only reason for that is because sometimes what you'll see is it goes like this, comes a little bit lower, and then it goes higher. So I'm just doing this or below the previous low to mitigate the way that happens with the choppiness of the price action. So cool. So all the names are in. So once I get that sent, we will, what's the word? We'll do a little spinny wheel thing. So yeah, AUD CAD actually still looks pretty good. And so does AU. AN I'll leave alone. Although Australia's a lot better off, I think New Zealand is also pretty decent. So I want to go where there's pure divergence. That's kind of what I do. So AU, USD is really poor. Canada, a lot worse off than than Australia. You see what I mean? Those are pure divergences, whereas New Zealand are also benefiting from China. So I don't want to trade that. Although it makes sense because Australia's a lot better off, I just don't want to constantly monitor the chart, basically. That's the whole reason I do it. So let me just get up a name generator. Wheel of spin thing. So those are the old names. So we'll delete that. That's from our last session. And we'll chuck it into here. This one over here. Cool. So we'll spin this out. For those who are new here, welcome. But the way it works basically is we spin the wheel. So the first one will be from Apex, then Alpha Capital, then a 6-month Trade Zeller. So for example, we spin, your name's chosen. And then what happens is I'll give you 45 to a minute to put your name in the YouTube chat, because obviously there's a stream delay, so I'll wait. And then if you're not in there and you don't say you're here in the YouTube chat, then we move on and we remove you and we spin again for Apex, for example. Then what happens is that you open a ticket in the Discord within 24 hours and then you'll get your account. So that's the way it works. So let's spin and then I'll answer any questions and then we'll move on and then move on and move on, etc., etc. So let's just spin and have a little look. So this one's called Paulos E1X. If you're here, just drop it into the YouTube chat that you were here. Just say you're here or something, and then we'll move on to the next one. If not, we'll obviously remove you. Do you place your stops on higher time frame or 1 hour swing? Higher time frame. So for example, let's say I bought here. The reason I do that, by the way, is because I'm not trading lower time frame. So I'm not trying to trade like 1 hour low, if that makes sense. I'm on the higher time frame. I'm just using 1 hours to refine the entry a little bit. You're here. Perfect. I see you here. So, well, congrats. We'll remove you. Remember, open a ticket within 24 hours, please. Otherwise, you will not be able to get it. But yes, in the Discord. And then I'll continue answering the other question. So this is for a Alpha Capital. I'm not sure of the size. You'd have to ask one of the mods. Cricket Diaries 108, if you're here, drop it in the chat. But yeah, as I was saying, the reason I don't do that 1 hour is because, number one, the lower time frame you go, the more volatility you have, right? In terms of like stops. Even if you're on the 5 minute, there's a lot of volatility there. You're more exposed to currency fluctuations, basically. So what I do then is, okay, I used 1 hour only for entries or like refining my entry, but my stops are at high time frame levels. Because at the end of the day, you could, if you really want to, wait for a 4 hour push and then buy. I don't do that. It's just my personal thing. I just don't like to do that. So what I'll do is wait for a break of structure, wait for it to pull into an area of demand or supply, in this example, demand, and then my stops will be below the high time frame low. So like here, because that's the high time frame level, isn't it? So therefore it goes below that low. If it goes below here, then it's going to go to the next area of demand. And then we do the same thing. So you're here, perfecto. I see you here. I see you here. So we'll move on to the next one. So this is for 6 month Fraser. I just want to see if there are any other questions. I did put a 2-minute timer. So unfortunately, if you are slightly delayed, you may not be entered. Abdul 08 Aziz, if you're here, please drop in the chat. But yeah, that's basically how I do my charts, right? Like you might notice how simple my technicals is. At the end of the day, if you keep your trades and charts very simple, right? Trying to do all of these different concepts out there just overcomplicates it just for the sake of it. What you soon realize is simplicity pays. That's what I assume. It took me a few years to learn that, but simplicity pays at the end of the day. It's about the reasons why you are buying a currency, which is from fundamentals, which is very difficult to learn, but it's very rewarding. So that's why I would recommend doing it. So you're here. Congrats, Abdul. So that's it for the giveaways. What are your thoughts on today's NFP? I did give it earlier, but basically on the headline, it looks good. But if I show you on Bloomberg, so Bloomberg normally has quite a good live chart. I think I have to go on the US version. Where is it? They do have a really good live, but basically the headline was only skewed up by manufacturing, which does make sense because if you looked at manufacturing PMIs that came out last week was very, very good. But it was skewed up by manufacturing, healthcare. If somebody else could drop it in the chat, I can't remember off the top of my head. I looked at this a good few amount of hours ago. Manufacturing, healthcare, and something else. And a couple of other little bits and bobs. And then a lot of the other ones were quite poor. So that's the only reason it was good, was because of manufacturing, which in on itself doesn't really contribute too much to the US economy compared to like manufacturing China, for example. And the other ones out there are quite bad. So on the headline, it looks decent, which is fair enough, but the underlying is not good. So therefore, you look through the data. If the underlying was really great, then it could change and the dollar will probably be a lot stronger than where we are now. But because the underlying is not good, we are not going to be bullish the dollar. That's kind of how you differentiate between like the volatility that we've seen here. For example, this, I'm not looking to sell there, but the volatility that we've seen here to understanding that sometimes you see a push and then it continues to trade higher. We've all seen this price action here before. what you have to understand is what the data actually means in the underlying as well. So it's good on paper, but the underlying isn't as good as it makes it out to be. Data is key. That is correct. So yeah, apart from that, the only other ones I'm looking at are euro dollar longs. So for example, we are, let me have a little look. This reaction tells you a lot about, you need to know about the data that we've just seen. So I think this is just marked news volatility. We did come into these previous highs and this one here. So what I'm going to do then is probably wait for a high to be created, a pullback, and then another high, and then I'll get in on this pullback here, because now that creates an interim price action, because this is not a trend, right? There's no trend here to go long. So what we want to wait for is this high to be created, and then we get in on the other high low. So that's what I'll be waiting for euro dollar. GA, we're still selling. We had some nice sells still. GN as well is another good sell. Actually, this is really good to enter, by the way, if you were looking at this price action earlier. Another good one for me is dollar yen to go a little bit lower. So for example, right now I would look at I'm a little bit cautious of where we're at in terms of the trend. Like if this closes up where we're at now and creates this wick, then I don't want to be looking for a supply zone here. Why? Because remember, simple technicals now, this is not a lower low, because there's no closure below this low here that was created by this lower high here. So we need this to close below this low for us to look at this supply zone. So I am cautious of it. So let's see how we do. But if we do that and then we continue tomorrow and then we close, that's perfectly fine. Then we'll look at that supply zone. If not, I'll probably leave it alone for the time being, because there's no trend there on the technicals in terms of this bit. So I'll let price action do its thing and then we get in, basically. In this example, I am, yes, because the reason I'm looking out for the 1 hour supply zone is because we haven't pulled back on the higher time frame. Like if we pull back here, right, like this, then I'll look at like a daily or a 12 hour or 8 hour supply zone, like here, for example. But because we aren't, and we're kind of selling towards this trend down here, we have to go slightly more lower time frame. Euro AUD is a good sell, like I spoke about. Europe is good though. Don't get me wrong, Europe is doing pretty well, especially later on in the year, where their fiscal package that they mentioned last year around March time is expected to work its way through the economy this year, which means good growth, which means less rate cuts, or less need for rate cuts, and inflation is coming slightly lower as well. So basically they'll hold rates at where they're at because they're at the neutral rate according to them. What's another good one I'm looking at? A lot of these pairs have already moved quite a lot. You know, we were speaking a lot about this like good few amount of weeks ago, so it's moved a good amount of price now. It's just a matter of getting back in. Like for example, this Euro AUD, what I'll do then, start on the daily. So let me delete this. Start on the daily time frame and then just work your way down the price action. For example, we have a very small daily supply zone there. 6 hour, a very small 6 hour supply zone there. So in this example, let's see what I'll do. Four hour. Ugh, it's not good. And it's not a huge supply zone. That's the issue. Is there a whole number there? There is. Okay, so for example, anywhere between 67,500 to that supply zone on the daily is where I'll look to get in. So what I'll do then is if we pull back into this region, wait for a break of structure to form. We don't sell it the moment we get into it. We wait for a break of structure. So once that break of structure forms on the 1 hour, we get in, wait for a supply zone to be whatever, stops above the high. So like probably this high up here, and then target on the daily time frame, look to your left, and then you'll probably target around 165 to 164 basically these lows on the left right there. That's what I would want to be doing, those lefts right there. So that's kind of how you do it, really. Yeah, that's essentially how you do it. What is your thesis for euro dollar? EU sales seems quite neutral. So in terms of data right now, the data is okay, right? It's not like super expansionary, but in economics or in fundamentals, you do have to consider what could happen in the future as well. So in the future as well, the fiscal package from Germany should start to feed itself through in data as well. Meaning you should start to see bounces in some good data, such as employment. As a result, what happens is the ECB probably won't want to cut in that point. Why would you want to cut? So you would only want to cut when growth is poor, because cutting supports an economy through the angle of interest. So what happens then is growth should be better. The global economy is starting to recover a bit. Not a huge amount, but it is starting to recover nonetheless. The US data is slowing down, and the US has more rate cuts to come through. So what you're doing is you're comparing the relative future from the US versus Europe. So in that example, to me, euro dollar should be higher than lower this year. All you then do is you wait for price action to allow you to get in. You wait for those break of structures. You wait for those areas of demand on euro dollar. So therefore you go long. And that's what you do. If you want to add on rate differentials as well, if the Fed continues to cut, this should spike the spread higher on the 2-year. So if we look at rate differentials on the 2-year, I can't remember to do this now. There we go. Daily time frame. The spread should start to decrease. Did I put the US one first? Oh no, did I? Wait, let me just double check. Oh, okay, never mind. EU 02Y versus US 02Y. Enter, remove it, ticket. So for example, this spread should continue to push higher, which basically means yields in Europe are doing a lot better than the US. Why? Because data in Europe is stable, whereas the US's data is starting to slow down. So what happens is the Fed should start to cut further, which pushes, like, you should see like a bull steepness in the bond market, which pushes this spread higher, which is beneficial on a rate differential. So there's other angles you can look at it. This is just like extra confluence, basically, as to why it should go higher. But that's just my opinion. Everyone has their opinion, of course. If in percentages they don't move good, but they are slow and reliable. Which pair are you talking about? Euro GBP for sure. It's a very slow, boring moving pair. Other ones are like Swiss pairs. They are very slow and boring. Euro Swiss. Pound Swiss kind of makes up for it because there's pound volatility. But definitely Euro Swiss and Euro GBP are very boring, slow moving pairs. AEN as well, in terms of pip count, is very slow. But yeah, apart from that, everybody, that is myself. Let's see what happens, I think. We should have a good amount of trades that should be starting to form now. So we should now start to look to get in. Don't know what data we have this remainder of this week. This probably won't do much for the US. Inflation this week. So watch inflation. In particular, watch these components of inflation, which these two here are the most important for the US right now, which is services, less energy, and shelter, which is under the core components. But those are the two you should be watching in particular. But yeah, apart from that, everybody, that is myself, and I will, of course, see you all next week. Take care, everyone.